I wasted years investing wrong. These 3 rules fixed everything and built real wealth. I tried picking stocks. I chased trends. I panicked during crashes. I made every mistake you can make. Then I learned 3 simple rules that changed everything. Rule 1, time beats timing. Rule 2, boring wins. Rule 3, stay the course. These aren't exciting. They're not going to make you feel like a genius, but they work. They've built more wealth than any hot stock tip ever could. Let me show you exactly what each rule means and how to apply it starting today. Most people approach investing like gambling. They're trying to get rich quick. They're chasing the next big thing. They're panicking when markets drop, and they're losing money. I did the same thing for years, until I learned 3 rules that completely changed how I invest. These rules aren't sexy, but they work. Rule number 1, time beats timing. Everyone wants to know when to invest. Should I wait for a crash? Is the market too high right now? When's the best time to buy? Here's the truth. Timing the market is impossible. Even professionals with advanced tools can't do it consistently. Yet individual investors think they can. The data is clear. Time in the market beats timing the market. A study by Charles Schwab compared 5 investors. One invested at the perfect time every year, right at the market bottom. One invested at the worst time every year, right at the peak. $1 cost averaged throughout the year. One kept everything in cash. And one only invested when they felt comfortable. Over 20 years, even the worst timer who invested at every peak still outperformed the person who stayed in cash trying to time it. Why? Because they stayed invested. The market trends upward over time. Missing the best days costs you more than enduring the worst days. Here's what this means practically. Stop waiting for the perfect moment. Start investing now. Invest every month regardless of what the market is doing. When prices are high, you buy fewer shares. When prices are low, you buy more. Over decades, this averages out, and you capture the long-term growth without the stress of timing. I wasted years waiting for crashes. I'd read the news, see predictions of doom, and hold off. Meanwhile, the market kept going up. I missed massive gains waiting for perfect timing that never came. Once I adopted this rule, my stress dropped and my returns improved. Time in the market is what matters. Rule number 2, boring wins. The most boring investment strategy is the most effective. Buy low-cost index funds, hold them, add to them every month, that's it. No excitement, no stock picking, no day trading, just consistent boring investing. But boring doesn't sell. Financial media needs excitement. Stock picks, market predictions, the next hot sector, they need you glued to the screen. So they make investing seem like something you need to actively manage. You don't. In fact, the more you mess with your investments, the worse you typically do. Studies show that investors who check their accounts frequently and make frequent trades underperform investors who set it and forget it. Why? Because frequent checkers make emotional decisions. They see their portfolio down 10% and panic sell. They see a stock up 50% and FOMO buy. They're reacting to noise instead of following a plan. The boring strategy is simple. Pick a low-cost index fund. VOO for the S&P 500, VTI for the total stock market, whatever. Set up automatic monthly investments, then ignore it. Check it once a quarter if you want. Otherwise, leave it alone. Let compound interest and time do the work. This strategy won't give you stories to tell at parties. You won't feel like a genius, but you'll build more wealth than 90% of stock pickers because you're not fighting the market, you're riding it. And you're not making emotional mistakes. I used to think boring meant I wasn't trying hard enough. I'd research stocks, read earnings reports, watch CNBC. I was active, I felt smart, but my returns were mediocre. Once I accepted that boring wins, I switched to index funds. My returns improved, my stress disappeared, and I got my time back. Rule number 3, stay the course. Markets crash, they always have. They always will. In 2008, the market dropped 50%. In 2020, it dropped 30% in a month. These crashes test your discipline. Everyone panics, everyone sells, and everyone locks in their losses. The investors who get rich are the ones who stay the course. They don't panic sell. They don't abandon their plan. They keep investing through the crash. They buy more shares at lower prices. And when the market recovers, which it always does, they're far ahead of the people who sold. Here's what staying the course looks like. You're invested in index funds. The market crashes 30%. Your portfolio is down. It hurts. Every fiber of your being wants to sell and stop the bleeding, but you don't. You keep your monthly investments going. You're buying shares at discounted prices. You trust that the market will recover, because history says it will. Then the market recovers. Within a year, it's back to where it was. Within 2 years, it's hitting new highs. You not only recovered your losses, but you also bought shares cheap during the crash. Your wealth grew. Meanwhile, the people who panicked sold are still sitting in cash, afraid to get back in. I failed this test in my early investing years. I'd see my account drop and sell to protect what was left. Then I'd watch the market recover without me. I did this multiple times before I learned. Now when markets drop, I don't even check my account. I know it'll recover. I keep investing, and I trust the process. These 3 rules sound simple, but they're hard to follow because they require patience. They require discipline. They require ignoring your emotions. Most people can't do it. That's why most people underperform the market. But if you can follow these rules, you'll build wealth. Not overnight, not in a year, but over 20, 30, 40 years. You'll retire with more money than people who earned twice your income but couldn't follow the rules. Here's your action plan. Rule 1, stop waiting. Open a brokerage account today. Start investing this month. Even if it's just $50, time in the market is what matters. Rule 2, pick a boring index fund. VOO, VTI, SCHD, doesn't matter which, just pick one and stick with it. Automate monthly investments, then stop checking it constantly. Rule 3, commit to staying the course. Write down your plan. When markets crash, reread your plan. Don't panic, don't sell, keep investing. If you do these 3 things, you'll outperform most investors. Not because you're smarter, but because you're disciplined. That's what separates successful investors from everyone else. That's Wealth Mode. If this video was helpful, please click the subscribe button and then like and share with your family or friends.